Starting with sales. On a day-to-day basis, a salesperson's job can be broken down into three key steps. Call buy-side clients, communicate market color, which entails giving market activity and trading insights, and reeling any quotes from traders. These three steps are repeated multiple times a day, and the vast majority of steps 2 and 3 are focused from about 9 a.m. till 11:30 a.m. The remainder of the day moves at a much slower pace. So let's break down the three core steps a bit further by looking at a daily agenda of a salesperson. A day in the life of a salesperson starts with an early AM start. The day kicks off with a morning call with all of sales, trading, and research. Typically, this is a giant conference call where all teams within reasonable time zones will dial in to give updates as to what they've seen in their market the day before, trends, patterns, as well as what they expect today. Next, sales will start calling their clients and engaging in conversations to understand the client's current needs and provide market insights and perspectives in addition to providing price quote requests. Furthermore, if the client needs any further insights from any of trading or research, the salesperson will take the time to make any introductions and schedule meetings with internal teams on behalf of the client. On a less glamorous note, sales will also ensure that clients are onboarded properly and have all of the necessary documentation in place to be able to trade with the bank. Furthermore, should there be any trade or settlement issues, the salesperson will navigate and troubleshoot the process for the client. Last but not least, salespeople will take clients out to dinner and drinks to build relationships in a space that is less formal. Now, this is the reason why I have written 5 p.m. or later. The day job, on the desk, usually ends no later than 5:15 p.m., and the trading floor is clear of salespeople and traders by absolute latest 5:30 p.m. However, their next destination is not often home during the weekday, but rather it is to a local hotspot bar or restaurant. They use this time to build a relationship and entertain their clients in order to understand their investment mandates more in a less formal environment. Through the course of food and beverage, topics discussed can range from personal to pitching trade ideas, lots of pitching ideas to generate more and more business for the bank. So in this sense, the day of a salesperson can actually be quite long, albeit not at the desk the entire time. So taking a look at all that we have discussed, you can see that when we say this role is client-facing, it is very literally and heavily client-facing. Now let's look at trading. There are three major components to a trader's role: to make markets, respond to clients via sales team, and to work with research and sales to pitch and execute trades that will manage the risk of their trading book for the bank. Traders typically trade one product, for example, government bonds, and they will spend their entire career developing a deep and narrow expertise on this one product. Their days will be focused entirely on understanding their own market and trading the product in ways that optimize bank client business and bank profitability. In brief, there are generally 4 types of trading at investment banks. First, there's proprietary trading, often called prop trading. Second, flow trading. Third, agency trading. And fourth, electronic trading. While we will not be getting into the specific details of each in this course, it is worth noting that the role most prevalent at investment banks is flow trading focused. Now, turning to a trader's daily agenda. It's a bit simpler than a salesperson because by virtue of being market-facing, the trader does not really face any time delays or has to wait on feedback that is anything short of instant. Like sales and research, traders start their days bright and early. Oftentimes, they are there at their desks the earliest. In reality, salespeople really need to be there just when their clients are there. However, traders have to be ready at all times. A trader's morning will be focused on getting up to speed on the latest market-moving headlines and any micro news that will impact their product. Throughout the day, traders will respond to price quote requests from the sales team and work in collaboration with sales to get more risk on or off their books. This is a typical trading day. Last but not least, research. Research is an interesting ground and one that is often in the shadow of the spotlight that is focused on traditional investment banking, origination, as well as sales and trading. What you'll find, though, is a role that combines several facets of each of those streams. A research team's function can be succinctly described in 3 words: to research, report, and project. At any given time, a research associate is doing some combination of these 3 things. Like their colleagues in sales and trading, there are aspects of their job that are both ad hoc as well as regular. The regular routine aspects are driven by corporate earnings release timelines, and this is often called earnings seasons. On a quarterly and annual basis, research associates and analysts dissect, analyze, and form views and opinions with respect to the companies and industries that they cover. However, in the moments in between earnings, research is synthesizing the information that they get from their sales and trading teams to pitch trade ideas and provide deep, detailed analysis on these ideas for buy-side clients. It is important to note that we have been speaking of research in the context of sell side, but there are also research roles on the buy side, and their core functions are the same, but just to a slightly different audience. So with all that said, let's take a run through what you can expect in the day-to-day life of a research associate. A research associate's daily routine can be a long one. On the one hand, during corporate earnings release season, the team must be up and ready to go super early. When I say early, I mean 6:30 a.m. kind of early. Conversely, because they are neither truly market nor client-facing, they do not have an external force that sort of signals the end or the beginning of their days. In other words, research is neither at the mercy of markets nor clients, and there is a large seasonality to the workflow driven by corporate calendars. Typically, a research associate's day begins with getting caught up on all overnight news and market-moving headlines. Whether it's global geopolitical or more localized news, a successful research associate will be very well informed. Right after, the entire trading floor will kick off the day with a morning call hosted by sales and trading. Research is typically more of a passive participant, listening in and asking questions rather than directing conversation. And if there are any earnings calls or any news that is material enough to warrant a public press conference during the day, research will dial in, listen, and be actively asking questions that will help form their view of how the event may impact stakeholder interest. They'll write up call notes as well, update Excel financial models, and perhaps write investment theses and aim to get the note out to clients before the end of the trading day. If news or events or calls take place midday instead of first thing in the morning, the note will be out the following day. This will all usually happen by noon, and the day will start to slow down as you put together any marketing materials for client presentations, usually in the form of PowerPoint slides, and you might accompany a salesperson or trader to a meeting or 2.